Daryl. He's got a couple questions here for us. 63 years old. He says, if I move stocks from a traditional to a Roth, should I move ones up or down to make it better for taxes? I think I heard you say down, but I wanted to be sure. He's also retiring soon, and so he's saying I have to pull my stocks for income. Should it first come out of the traditional or the Roth? I had a note that Dan had said to come out of the Roth, but I thought I caught you saying traditional. Which one's correct?
Well, the first consideration that you want to have when you're trying to decide which stocks to move from the traditional to the Roth is that you want to move the pieces of your portfolio that are the most aggressive, because if they are in a traditional IRA, you are simply postponing the taxes. So if you have a stock that is a really good growth stock and it increases a lot in value, then you're not only growing that value for you, but you're growing that value for Uncle Sam, because you're going to have to pay taxes on all of it whenever you pull it out of your IRA in the future at a tax rate that we don't know yet. And I'm in the camp that taxes are going to be higher in the future than what they are today. If you take and move that stock to a Roth account, then you can get unlimited growth and not have to pay any taxes on it from the time that you move it. Now, you have to pay taxes when you move it from one to the other, but that's all you have to pay. You have unlimited growth potential going forward that you won't have to pay taxes on. So the second consideration, if you first identified the most aggressive pieces of your portfolio, then you can look to see which of those stocks are down the most, because you only have to pay taxes on the value of the stock on the day that you move it. So if you put some money in and maybe you're down by 30, 40, or 50%, rather than paying taxes on the amount that you invested, you only pay taxes on the current value. Then when it recovers in the Roth, you have all of that tax-free growth. As far as distribution planning goes, and that's what we call the set of decisions that you make when you're trying to decide how to fund your retirement. So that's a little bit more complicated. Do you take income from your traditional IRA first or your Roth? Well, it depends on what tax bracket you're in. If you have money in a traditional IRA, and let's say that maybe you don't have any other income, what I would look at doing is taking out enough income from the traditional IRA to get to the top of the 12% tax bracket. So that's different if you're married versus if you're single, and depending on what kind of deductions that you have. If you work with a tax professional, you can probably get some input from them and just ask them how much income you can take to get to the top of the 12% bracket. Then you're going to want to shift and maybe look at taking income from some different areas. But I would first look at taking it from the traditional.